everybody. Welcome to another episode of the series. Today, we're going to have a chat about the differences and similarities and the problems it causes between the jurisdictions of the US, EMEA, and the UK. That's not a particularly new topic. I've dealt with it over my career for a very long time, and I have two very, very good speakers today. Adrian Quigley from Santander UK, who deals with his head office in Europe and also has to cover all the endless changes of regulation in the UK. And David Harley, working for ANZ as the head of financial crime at covering EMEA and the US. Welcome, both.
Thank you. Nice to be here, Vesna.
Hello. Why don't we start with a quick introduction? Maybe, David, we start with you.
Thanks, Vesna. Yes, I've been in financial crime since probably the 90s, initially in law enforcement when the first legislation came in about forfeiture of assets, and then working in banks in the late 90s across the Pacific, and since then in financial crime effectively across a number of banks in Australia and now in the UK.
And we have Australian perspective as well there. Adrian, over to you.
Thanks, Vesna. Yeah, so similarly, I've been a sort of career risk and compliance professional. Been in this game for about 20 years in various different guises. So I started my career actually at a money services business, Travelex, which is probably well known to most people, but then spent time in internal audit in Lloyds Banking Group just after their deferred prosecution agreement for sanctions busting, and was then head of compliance again back at Travelex, and then spent some time at a life and pensions and insurer as money laundering reporting officer. And then latterly at Virgin Money as their MLRO as well, before moving to Santander. And in my current role, I've done a number of different functions within Santander, looking after their corporate banking and their corporate and investment bank, but also looking after their wider non-financial risk team for the retail bank. And over the course of my career, I've had the pleasure, as I say, of being in audit and also looking after information security and data protection teams. So fairly varied, and I've seen a lot in that 20 years. It would have to be said.
Thank you for those intros. So to set the scene, we have diverging regulation across the globe in some ways, but I think that FATF also keeps us somewhat in the framework. I think you could be possibly a pessimist and say Brexit, UK is out, sanctions are all over the place. We have different standards. But, I do remember even 10, 15, 20 years ago when we were dealing with the deferred prosecution agreement here and there, counting how many differences there are and drawing those circles of overlaps between different regimes. Those difficulties are there. But I guess we're still trying to comply with similar requirements. However, the nuances and the detail does cause its differences. Maybe we can start with you, Adrian. In terms of the day-to-day, where are the biggest challenges for you in terms of the differences between what Spain and your head office wants versus the UK? Where do you see those biggest challenges?
So look, it's a really interesting question, Vesna. It is something that takes up a great deal of my team and my team's time, just making sure that we have the view of the nuance. In some ways, to your point, there isn't an enormous difference, right? The reality of the situation is the overarching frameworks are very similar. They've all come from the same genesis, really, over the course of the last couple of decades. So there aren't enormous differences. I think what we have seen post-Brexit in particular are more specific challenges around tightening of certain expectations or requirements in the UK. So post-Brexit, the sanctions regimes, obviously, we had to make sure that we were putting in place directly in the UK, as opposed to those just coming through the EU. And that was a big change. It was operationally a challenge to deal with, because all of a sudden you've got specific lists that you're having to screen against, that whilst for all intents and purposes they largely contained the same names, it was something different from a process perspective, and therefore the operations teams had to deal with that. I think more recently, some of the challenges that we've also started to see are potential considerations with the way that the various different supervisors look at things. We've had a lot of news in the press over the course of the last year or so on the way that the UK handles PEPs, for example. And actually, part of what we are trying to make sure that we're doing is adhering to what our home supervisor, the FCA, is telling us in terms of how we handle PEPs, but also being very cognizant of how our group supervisors and the European Banking Authority and various others will view that approach. So making sure that we can really strike the right balance, I suppose, between those different things is important. And fundamentally, from my perspective, Santander is the subsidiary of a European group. And therefore, the European side of things flows down through the group policies. But we then quite often need to have, like in the PEP example, conversations with our supervisor as to, well, how does that actually manifest itself in day to day? So I think that it's those slightly minute points of detail that actually can cause an operational headache that I think is where we spend most of our time.
And just for those who are scratching their heads now, who are maybe have less experience than you with similar problems, what subject to not divulging anything confidential, how have you dealt with it? What were the things that you had to change around? With regards to PEP specifically, let's say, not to go into every detail of every element.
Yeah, no, absolutely. Look, I mean, fundamentally, in line with all UK banks just now, we've spent a lot of time reviewing our PEP process and procedures. But I think just dialogue with the regulator. There is in the UK a very good positive dialogue between the banks and the regulator. There are regular forums where we meet and speak to the FCA, the specialist supervision teams, and have cross-bank discussions. We've also got industry groups that we contribute to. So having that open dialogue is I think the major part of how to deal with it. But then on a practical basis, it's bringing the output of that back into the bank and testing, well, actually looking at what the regulator is expecting and those different jurisdictional aspects as well. If we were to be audited on this tomorrow, do we have up-to-date procedures that reflect the current requirements? Where there are deviations from policy, for example, from a group perspective, because we've got to look at the UK local perspective, are they properly documented? Have they gone through the proper level of governance? Is everybody clear about that? Those things are really crucial, because then when you do have an audit or a supervisory review or whatever it might be, you can point to have gone through that proper process, and there aren't any questions over about why you're doing what you're doing in the circumstances.
Yeah, what really brings to mind is that those nuances, where I'd really love to go through this conversation, is how does it get us closer to managing risk better? Because David, the other day we were with your colleague from Australia, and I recalled the conversation, and it was so much more about administration than about actually risk addressing. And so maybe we turn to you, David, now, and a little bit, you have more differences to deal with. You have EMEA under you, and you've got US. They always Brexit on everybody. They think nothing is the same in the US. And then you have Australia as the headquarters. How do you deal with the differences? What are the main areas that tend to give you a headache?
Well, I think trying to stay on top of the changes and then ensure that the policies that are in place have enough wiggle room to allow us to apply local carve-outs. So I guess as a bank, we're in about, I think, 27 or 30 different countries.
Yeah.
And, each country, if you look at Singapore, Hong Kong, all have their own twists and requirements. Australia, the Australian legislation, the AML requirements don't kick in unless you perform what is documented as a designated service. Whereas in Europe and the UK, it's the formation of a business relationship. So when Australia start talking about, are you delivering a designated service? The answer is no. We've formed a business relationship. So you're talking at cross purposes sometimes. So our policies, by and large, have been developed along the way to allow for us to deal with those variances. And it's how we actually stay aware of them or horizon scan the changes that come through. And I'm happy to say that apparently we're getting a new horizon scanning tool. It's going to be integrated into our non-financial risk tool. So would like to see it work. I haven't seen a demonstration of it yet, but I'm hoping that that's going to give us a bit more coverage. That's the number one headache. Another headache can be, how do I get group, which is in Australia, to think of the other side of the world? So London, New York is the opposite side of the world, and as important as they may be to the group, there's a tendency to just think of Australia because that's the beast of our business. So we have lots of conversations, ongoing conversations, to ensure that we stay, if not top of mind, at least near the top of mind around this works for us or doesn't work. With regard to sanctions, we're kind of lucky again because we're in so many different countries. We're used to screening. I think we screened 47 different lists. So the Brexit piece with the UK regulations didn't come as too much of an impost and was picked up pretty easily. But you then have to look at all the different little variances around, like the UK terror designations and those sorts of things, to make sure that group are aware of that sort of thing. And I am a bit concerned with some of the European conversations about, and I think OFSI's versions of almost intraday identification and asset freezing of customers. So virtually as soon as they go on a list, you identify them. Though I understand that there's a lot of pushback both on the continent and here around it because our screening is done elsewhere
overnight
in the world. Well,
right.
Yeah, but it's done elsewhere in the world, and you're highly dependent on the lists being uploaded and processed, and then processed against all of the data that you've got. And obviously, they're bigger banks than us with bigger issues than us, but it's a problem. And I think sometimes there's little bits of legislation that come out so that can cause problems. So, the legislation that came out, I think it was an omnibus bill in the US around the changes to the statute of limitations for OFAC offences from 5 to 10 years. I mean, what that presages is that you're going to have to retain your documents for 10 years, but that piece of legislation doesn't actually do that. It's in the regs, and I think the OFAC have come out and said that they intend to change the regs so that the document retention period is 5 to 10 years. What's the impact globally on the rest of the bank? As a trading bank, we are heavily reliant on access to USD, and so obviously there's a cascading effect. And if you don't necessarily pick that sort of stuff up, or you pick it up too late, it can cause a problem for you. So I think you've got to be on your toes.
Yeah.
all the time.
Are you still owning some elements of your sanction screening, or or is it all centralized globally?
Well, to a point. So we there's a triage process that is run centrally. Anything that can't be triaged is escalated to the local MLROs to investigate and clear or report as required.
But I mean, in terms of the tools.
No, that's all
Central.
done centrally. Yeah.
Yeah, because I think that the effectiveness of the tool is much greater because you can invest into really, really high-powered tools that have great precision, and therefore you can catch more and reduce more false positives and obviously duplicates. I've worked in firms that had 57, 60-something jurisdictions, and when you have to screen all those lists, duplicates are really massive, and so you do have to have good tools that do remove the stuff that you do not need to look at 47 times or more. Adrian, how does it work for you from that perspective on the sanction screening side? Is that also centralized? How do you provide, I mean, with these expectations that maybe intraday freezing, that seems pretty
challenging.
It's like, I don't think it's possible.
So look, so we do, certainly from a Santander UK perspective, still have
on some of your own. Okay.
The bulk of our day-to-day screening operations in the UK, but we are, exactly as David's just said, looking to centralise, because as you rightly point out, Vesna, the ability for us to, as a global organisation, manage the risk of the screening systems, the algorithms that we're using, the way that we calibrate them, becomes much simpler if you've got a sort of centralised system, even if you've ultimately got some level of distributed operations working those,
yes,
which is effectively the model that we'll go to. So certainly from our point of view, moving towards that single system view, but we'll probably end up in a position where we've got distributed ops models on a kind of follow the sun basis realistically. The other angle that I just add to again though is in the intraday screenings, a great example of that, that ongoing dialogue that we have with the regulators and try to engage with OFSI and have the discussions at the industry and trade bodies, whether that's locally but also on a sort of global basis. It's really, really important, because sometimes there's an unintended consequence of legislation or regulation that's introduced, and just making sure that that's understood is a big part of what we try to do.
And with AMLA coming into power, do you expect that to affect you? But I don't think I've seen the list of the high priority banks that they intend to set up.
Yeah, so it's a good question. It's something that we are working very closely with the group team on. Obviously, we do expect AMLA to have an impact on the overall supervision strategy for our organisation. How that breaks down is, I think, the piece that's as yet unknown. But again, constant dialogue with the EBA and making sure that we understand the direction of travel there is quite important. And I think the key thing for us is we'll see, for example, in Spain, the current supervisor from an AML point of view, set back, will move away and AMLA will step in. It's what then will that generate by way of a downstream impact for AMLA's overview of group subsidiary models or group branch models, because we've got a mixture globally of subsidiaries and branches that operate around the world. And I think until we see that sort of first sweep of, well, this is what we think it means, it's difficult to predict, but it's very much a case of keeping close and trying to prepare ourselves as much as possible for that.
David, I know that AMLA is preparing to have just a list of I think it was 40 banks that were going to be key for them to supervise. So you'd hope not to be on that list and avoid
absolutely.
impact.
Absolutely. And we're kind of lucky in this part of the world in that we're more of a wholesale bank, and what we're doing is patching business from Australia and Asia for those customers there, and helping them in Europe and the UK, and Europe customers who want to do business in our part of the world. So I'm eternally grateful that we have no retail business, we have no private bank business. We've got a very limited and targeted demographic of customers, and that's the same in our European branches. So my fingers are crossed that there are other banks more important than us for AML to focus on.
Right. In terms of, we've got all kinds of new bodies and so on in the UK. We'll come back to that, Adrian. But from the US perspective, what are the wins that are currently, something that you are having to think about? I think you spend most of your time in London, if I'm right.
Yeah, I do. I think the main thing that I have to think about is how I support my American MLRO, and the team that supports them. There are, how do we make sure that they get the outreach that they need, the support around, because we're subject to OCC examinations every year. What's the support for that? How do we rectify anything that needs fixing? How do we prep for them? So it's a very ongoing process. And then there's always the consideration around, we have a reasonably extensive process around sanctions enhanced due diligence. So we look at our customers. We're very fortunate as a bank to have made some decisions back in 2014 who not to deal with and what countries not to be in. But we do look at our customers intensively to see where they do business and what potentially our funding of them could be used for. So New York and London, with the multinationals that we deal with, we have a number of those customers. So there's a lot of work that goes around that. So it's supporting the New York office in dealing with the regulators and working through those sorts of issues.
Do you find that since you are on that line of Australia to Asia and then Europe and the States, like it's a square, you have additional needs for the FIU? I mean, that's one of the maybe bigger changes over the last few years, that whole rise of investigations and trying to understand information that's really well beyond the old KYC model. It's to bring together the movement of funds. And what I'm hearing, what you're describing is a little bit that's what I think I'm hearing. Are you finding that is something that you have to focus on much?
Yes and no. I think for us, we offer niche products, so we don't offer a whole of bank product or a whole bank suite of products. Mm-hmm. So we'll do a trade product, or we'll do money markets out of London or New York. We'll do money markets, deposits, FX, that sort of thing. So they're limited in what we do, and we're limited in what we can see that our customers are doing. Obviously, we have enhanced our negative press monitoring, mm-hmm. And that triggers most sorts of investigations.
Right.
But our FIU, I think, and we have quite a strong FIU or intelligence team in Australia that has.
In Australia.
Yeah, they're Australian team, but they've built up a very strong relationship with law enforcement across Australia and New Zealand and into some of the Asian countries. And they have an ongoing partnership with Austrac. Most of the banks in Australia do. So there's a lot of targeting of sex crimes, human trafficking, animal trafficking, that sort of stuff, which doesn't really apply to us.
Business-wise, I see.
Well, because of the types of customers that we have, and if we do a revolving credit facility that's a liquidity backstop, it's not designed to move. If it does move, we get worried. But it's so that the products and what we do with our customers on this side of the world is slightly different to what they're doing in Australia and in parts of Asia.
Fair
but
enough.
Certainly the intelligence team in Australia is doing an amazing job.
Yes, I know they're quite well known, and they're quite advanced. So, Adrian, in terms of addressing the risks versus, to come slightly back to the beginning of our conversation, versus the complying with the regulation, which we talked mostly about here, where do you see you're getting the most value these days? In the UK, we are cooperating quite deeply with the government and with the regulators. There's an increasing depth of the private-public relationship, and I'm curious about nuances between PEP's regulation and then that. There's quite a big kind of difference.
No, it's like absolutely. You've hit the nail on the head, Vesna, in terms of I talk to my team about outcomes a lot. In fact, if you ask my team, probably they'd say my favourite word is outcomes, because it has to be what we're doing is getting a result, as opposed to we're ticking a box. Well, everybody can tick a box. That doesn't necessarily help. So we're definitely focused on those outcomes and how we get there. I think the public-private partnerships that we are part of in the UK are really starting to bear fruit now. A lot of them have been in place. If I go back to Jim, the Joint Money Laundering Intelligence Task Force was set up a number of years ago. That was a sort of that was the first step towards real PPP type activity, in my view, and it was quite groundbreaking in many ways. And over the course of a number of years, that has very much borne fruit. What we're now seeing, though, is a deepening of that type of relationship between the banks and first and foremost a connectivity between the banks in the UK and also potentially our group entities, but also law enforcement. And for those of your listeners who are eagle-eyed, perhaps there was a press release about an NCA initiative that Santander was very much part of and is part of, on information sharing. And the key aspect of that is, on publication of that press release, we've managed to collectively as an industry put 3 organised crime networks on the sort of investigation stocks at NCA, and it's all down to that public-private partnership, and it's all down to cooperating and really taking the time and effort to understand how can we deliver something that is actually disruptive to the economic crime landscape, as opposed to everybody just kind of ticking and bashing those boxes. So I absolutely agree. That's definitely where I see the value, and I think the conversations that we continue to have with regulators and with our counterparts in the industry is very much, how do we do more of this? How do we focus our time and attention on this? Because there is a tangible outcome from that, and that's what's important.
Right. And how do you find in terms of investment by the company? I know what David was mentioning earlier, that ANZ have quite a powerful arm doing this. They have investigations that comes off the transaction monitoring, and those that are more customized and come up from the conversations with the government. I think in the UK, maybe I'm wrong, David, and probably in the US, that conversation, the private-public partnership is really strong, and there's quite a lot of an increasing amount of exchange of information. And I think in the beginning there was a little bit of spying on banks and sharing something, and then the banks would bring information back into the forum, and then they get investigated and whacked. And I think that seems to be getting a bit more reliable and more partnery rather than
definitely the partnership and public-private partnership is definitely coming to the fore. We recognise, I think, collectively all the people that are involved in this. This is something that we have to work collaboratively to get the right results. And in terms of your question on investment from the company, certainly from my perspective, I have an FIU in the UK that reports to me.
You have your own, okay?
I've got my own. It's been built up. It's now a reasonable size, and we lead a lot of the activity. Actually, a lot of the initiatives on a sort of pan-group basis as well. But the group team have grown their FIU capability, and it's absolutely fantastic. My colleague Andres in Spain has built that up over the course of the last few years, and again, on a combined basis, we're seeing real results, and we're seeing that working together and collaboratively. So, it makes all the difference, to be perfectly honest, to actually seeing some tangible output from all the hard work.
And I'm guessing that at this point, now that we're actually mining data, that transaction monitoring and the collected KYC and adverse media and all of that, when you bring it together, however difficult it is, I know it's not even today easy, but it's beginning to show us that it's actually valuable as such. Am I right?
Definitely. I mean, David's overview, but certainly from my perspective, we've got a handle on the important data points, and also we've got a handle on how those things interact with each other much more than I think we previously had. So we don't look at the CDD in a silo and transaction monitoring in a silo and an FIU investigation. We join those dots up, and that's where we see the bad guys, for want of a better way of putting it, and can disrupt that.
Right. And at the same time, we still need to keep to the regulatory requirements, David, right? And you've got many to deal with on your side.
Yeah, correct. But I think even from a risk perspective, just being able to join things up with, the press monitoring, KYC, transaction monitoring, you can, whilst it may not be a regulatory concern, you can actually present to your businesses and say, do you really want to be banking this customer, or here's something that you need to be able to look at. So you're able to present it in a far more coherent way that they can make a better decision. And that's one of the benefits I think that we're also seeing. So there's a risk. I guess there's a benefit in your risk perception around what is a customer doing.
Okay. I think that we could be going on and getting into a lot of detail, and I'm very curious about some of the stuff you guys have said, but I think we probably have to draw to a conclusion here. Adrian, do you have anything to add, anything that you would like to point out in terms of differences, how you deal with it, what would your advice be, anything quick to share with our audience?
So it's a big question for a quick, but I think, look, for me, Vesna, the key thing is we are all, you said it right at the outset, ultimately the FATF recommendations kind of bind things together. So we are all broadly working in along the same framework, but don't be blind to those nuances, and make sure you take care of them, because they can trip you up. And ultimately, we need to speak together as a financial crime and economic crime community, because that way we can help each other make sure we've got the view of where those tripwires might be, I think.
That's a good point. David, anything from you?
Look, I'd echo Adrian. to be honest. I think globally it's all much of a muchness driven by FATF. It's just being able to identify those little tripwires that you need to be aware of, and making sure that I think the financial crime community are aware of what those tripwires are. You don't need other banks to trip over things, and you don't need to trip over those things if they're easily fixable.
Great. Thank you both very much. And we will try to do something with you guys soon again. Thank you for our audience and your attention.
Thank you. Pleasure.
Thank you.